Hi, this is Bill Polis, and welcome to my Instant Options Income training video number 2. Now, in this training, you're going to learn my 5-step options optimizer method that you can use to select the very best stocks and ETFs for use with the credit spread strategy you learned in video number 1. I'm also going to reveal what I consider to be a fatal flaw in how most people trade options. Once you understand what it is, it'll be almost impossible for you to place a high-risk options trade again. If you haven't watched training video 1 yet, make sure you go back and watch it after you're done with this video. It reveals my instant options income technique, where the realistic goal is to earn up to 2% of your total account size every 7 days. Now that's the equivalent of up to 8% every month or up to 104% every year, with less risk than just about any other kind of trading, no matter what happens in the markets. Video 1 is already generating a lot of buzz and excitement because of the huge profit potential that weekly options have, especially when you use the techniques that I teach in these videos. So let's dive into video 2 and continue the training. Okay, so here's the fatal flaw that most options traders suffer from. Most traders don't sell options because they've been told that the risk is substantial, which it is unless you use the credit spread strategy I taught you in video 1. Instead, they only buy options. And as we've learned in video 1, according to the Chicago Mercantile Exchange, 80% of options expire worthless. Well, when you're buying options, you don't want the options to expire worthless. So if that only happens 20% of the time, the odds are dramatically against those traders who only buy options right from the get-go. Let's revisit an example from video 1 so you can see what I'm talking about. So here's a chart from video 1, American Express Company, AXP. And the typical options trader is going to buy to open 10 April week 4 67.50 calls at a 19-cent debit. So instead of using the credit spread strategy like you learned in the last video, the typical options trader tends to go for a home run trade by buying cheap out-of-the-money options. So in this example, they might enter an order to buy to open 10 April week 4 67.50 calls at a 19-cent debit, which cost them $190 out of their account. And they're going to do this after the market closes on Thursday, 4/18, before it opens on 4/19, right in here. Now what this means is that when the market opens at 65.33 on Friday, the more the market goes up, the more money this trader makes. However, the market needs to hit at least 67.69. That's right up here, within 7 days. That's a gain of 3.6% in order for this trader to just break even. So if the market goes above that level, they make a profit. And if the market closes below 67.50, they lose 100% on this trade, or all $190. In other words, the market needs to go up 3.6% within 7 days in order to begin to make a profit. Now, this example, the market closed at 67.75. A week later, on Friday, 4/26. Now, the value of their calls would have gone up to 25 cents. So they'd make a net profit on this trade of $60. $250 value at expiration less what they paid for the call. That's a 31.6% return on investment. Of course, the higher the market goes within that 1 week, the more money this trader makes. That is indeed how the potential for big home run trades comes into play. Now you might be thinking, what's wrong with that? That's a great way to trade. Well, that's where the fatal flaw comes into play, because what's missing from the picture here are the odds of success. Remember how I said that 80% of options expire worthless? Well, in this example, the typical options trader does not want his options to expire worthless. If they expire worthless, he loses 100% of his investment. So that means that there's a 20% chance that he's going to lose going into the trade. And in reality, because of something called the options delta, which is beyond the scope of these training videos, the odds of success trading this way are actually closer to 10%. So the bottom line is that there's a 90% chance this trade is going to fail. So while this trade looks good on the surface, while it works out for this example, in reality, you could easily lose 10 trades in a row, wiping out your investment each time. Now that's a major reason why most people lose their shirts trading options. So a simple way to avoid this fatal flaw in how most people trade options is to use my instant options income technique that you're learning in these videos. Now, I've never believed in the get-rich-quick mentality. The odds of failure are just too high. Instead, I'm a big fan of get-rich-slowly, where the odds of success are much higher because risk is always controlled and limited by applying very precise trading rules. Now, you learned about the credit spread strategy in the last video, but as I mentioned before, you can't just apply this strategy to any old stock or ETF. You need to find the ones where the odds of success are heavily in your favor even before you place your trades. And that's what we're going to cover next. Introducing the Options Optimizer Method, my 5-step approach for choosing the very best stocks and ETFs to use with my credit spread strategy. Now, there are several ways to choose excellent stocks and ETFs as part of my instant options income technique. This is just one of them. Let's take a look at how this works. Okay, step 1 is to start with the list of stocks and ETFs that have weekly options. There are many thousands of stocks and ETFs to choose from, but less than 200 as of this recording have weekly options. Let me show you how to do this. So the first thing you want to do in order to identify those stocks that have weekly options is go to the CBOE, that's the Chicago Board Options Exchange website, that's cboe.com, and you click on Products and Weeklies. And that brings up a window where you can click on Available Weeklies, and that will give you the current list of all available weekly options, of which there are just under 200 or so. Now let's pick one out for an example to illustrate further what the next steps are. Let's choose Bank of America, BAC. So once you have your list of weekly options, the next step, too, is that the 20-day moving average must be greater than the 50-day moving average, and the 50-day moving average must be going up. So let's apply that concept to our BAC, Bank of America example. This is one of the stocks we found on the weekly options list on the CBOE site. And here is the 20-day moving average in blue and the 50-day moving average in red. And you can see that the 20-day moving average is greater than the 50 at this point, and again at this point. And also the 50-day moving average is going up at this point and again here. So this is the primary requirement that must be met before we look further to consider whether or not to place a credit spread for a particular stock. Next, step 3 is to enter on pullbacks. Let me show you what this looks like. So we want to enter on pullbacks, and you can see here the market moved up sharply above the 50 and the 20-day moving averages, and then it pulled back into support provided by the moving averages. So this would be a situation where you could consider applying a bull credit spread. Now then the market traded on higher. The 50 and the 20 are going up, and then it pulled back sharply in just a couple of days into the support provided by the 20-day moving average. Again, here is an area where you could consider applying a bull credit spread. Next, step 4 is to only trade in deliberately trading markets. Now, this is one of the most powerful concepts I've ever taught, and it bears repeating, so let me show you what this means. Now, this is an example of a deliberately trading market, where you see the market moving up and down, ebbing and flowing in a nice, easy movement where the candles from one day to the next are pretty much the same size. There's no erratic price behavior. It's the kind of moderate day-to-day price change that you'd like to see in a strongly trending market. Okay, now look at this chart. Now, this is an example of a market that is definitely not deliberately trading. You see the hopscotch pattern of the price action, where you've got unusually wide range bars You've got gaps in prices. You got sideways chop, abrupt movements day to day. This is a non-deliberate market. Now, this is precisely the kind of market you want to avoid because this market spells risk. When you have these abrupt kind of movements, that's nothing but unpredictable market behavior that translates to risk directly aimed at your account. So what most people do when they try to place a trade is they just apply whatever method they're using without regard to understanding deliberately trading markets. And even if they have a proven trading method, the odds are stacked against them if they attempt to trade a non-deliberately trading market. But if they only trade in markets that are deliberately trading, the odds are overwhelmingly in their favor. And of course, when it comes to trading, there's no such thing as a crystal ball. So the way to potentially build wealth is to do everything you can to maximize your odds of success. And that's why a deliberately trading market is such a big deal. Okay, back to our BAC example. Ask yourself from what you just learned, is this a deliberately trading market? And let's just draw a line through the price action. And indeed, you can see this is a deliberately trading market and one worthy of consideration for a credit spread. Finally, step 5 is to make sure that there are no earnings announcements next week. Here's how to do that. Just go to Yahoo Finance, click on Investing, Stocks, and then Earnings Dates. And that brings up a table where you can enter any symbol, for example, BAC. Click on Get Earnings Date, and you'll see the earnings date is scheduled for July 15th. So if BAC was setting up for a good credit spread trade the week of July 15th, you would not put that trade on. Why? Because when earnings are announced, the market will generally react violently, either up or down. Very unpredictable. You don't want to be in the business of trying to forecast earnings, or even tougher, forecast how the market will react to earnings. The risk is simply too high, so you just stand aside and go on to the next opportunity. So it's a very important checkpoint here. So there you have it, my 5-step options optimizer technique. One of the several techniques we use to find the very best stocks and ETFs for trading options. Remember, it's always about maximizing your odds of success, and this is one of the very best ways to do that. If you do nothing else but use this method, you'll already have a huge leg up on most other options traders. Okay, we're almost done with this video, but I just want to quickly address one of the common concerns I hear from people about options trading. And that is, isn't options trading awfully complicated? Well, like anything else, options trading is pretty easy once you get the hang of it. However, there's a lot of new terminology and concepts you need to learn if you're brand new. But here's the thing. You don't need to know everything about options trading to have the potential to do very, very well. In fact, I believe that if you focus on just a few simple, proven strategies, you have the potential to make even more money trading options than those traders who try to apply more exotic and more complicated option strategies. That's why my instant options income technique isn't about learning how to trade options A to Z. It's just about understanding a few simple yet powerful concepts. And as you'll soon see, this technique also isn't about studying hours of instructional videos. It's all about one of the fastest ways I've ever seen to have the potential to create weekly instant income, where the goal is to earn up to 2% every week, 52 times a year, with as little work as possible. And even though most people don't properly understand options, major financial publications all agree that if used properly, options trading holds huge potential for your portfolio. Barron said, in a world of low economic growth, with many investors wary of assuming too much risk, this year could prove historic for the options market. According to MarketWatch, by themselves, options are not dangerous. The danger is in the speculative strategies that some people use. Fortunately, the best antidote to risky option strategies is knowledge. And from the Wall Street Journal, options generate income and can juice returns in any market. A press release from TD Ameritrade said, more than 75% of all American investors remain unaware of the potential benefits associated with adding options to a diversified portfolio. And Bloomberg Businessweek published an article that said, selling options can generate extra income on your portfolio and may be one of the few ways investors can really enhance their returns. So as you can see, I'm not the only one who sees the huge potential that options trading has to offer. So I hope by now you're starting to get the picture about how lucrative my instant options income technique truly is. Just imagine going about your day like you normally do, coming home, spending time with your family, then taking just a few minutes to place and manage your trades. This kind of trading literally takes 20 minutes or less once a week on a Thursday night or a Friday morning. After you place your trades, you can sleep soundly knowing that you've done everything you can to manage risk and protect your money, while at the same time giving yourself the chance to earn up to an extra 2% every week. There's nothing else to do the rest of the week, so your lifestyle isn't interrupted. You don't need to stare at the charts during the day. You don't need to update your stop-loss orders in the evening. None of that. This is definitely one of the easiest, lowest maintenance ways to trade, and I can't wait for you to experience what it's like. So that's it for this video. I hope you enjoyed it. In the next video, you're going to see my instant options income technique in action as I show you an actual trade I placed with my broker. You'll see how money gets deposited into my account the second after I place my initial trades. Now, I like all sorts of trading, including stocks, Forex, and ETFs, but there's something very satisfying about creating instant income out of thin air when you trade this way. It just feels good. We'll also look at some more trading results so you can see how this technique performs over time. And I have some other surprises in store for you that'll make it easier than ever for you to begin using this technique on your own. I think you're really going to love it. Now, the next video will be posted shortly. In the meantime, make sure you understand everything in this video and go ahead and post a comment below if you like what you've seen so far or if you have any questions. For now, this is Bill Paulis wishing you good trading.